Hey guys, welcome back to the show. Today we have a very esteemed guest, Jacob Phillips from Lombard. Jacob, welcome.
Hey there, thanks for having me.
Yeah, today like super in the narrative. Lombard just started with their Berachain vault. Jacob, we'd love to learn more about your sort of background, how you got into crypto, how you sort of are building Lombard now. I know you were ex Polychain.
Yep.
Please, stage is yours.
Yeah. Yeah. So real quick, so Jacob Phillips, one of the co-founders of Lombard. Before this, I was building a DeFi perps protocol called Perennial on Arbitrum, permissionless market creation, fully on-chain, futures AMM, some cool stuff we were working there, trying to build like a true perps primitive. And then before that, I spent 3 years at Polychain. I was a partner on the ventures team. I did a little bit of liquid fund research, and then also led governance while I was there. And yeah, now working on Lombard, building Bitcoin liquidity infrastructure, built entirely on top of Babylon. Sort of this, we built this, the flagship product is LBTC. It's sort of two things in one. It is a Bitcoin liquid staking token and a cross-chain Bitcoin rolled up into one asset. Um, and yeah, it's been a hell of a ride so far.
So how did you transition from the Pubs product to the sort of Bitcoin product? How did that transition happen?
Yeah, the way I'd put it is it was just sort of the perfect storm, everything kind of happening at once. When I was back at Polychain, I invested in this protocol called Badger DAO. Actually,
Mhm,
Chris Spadaboom's
mhm,
former project. And so I'd been watching Bitcoin DeFi for quite some time. I'd explored the ecosystem in the past. And beginning of this year, it just sort of all came together for me. I was chatting with some Polychain colleagues who kind of helped incubate the project about Babylon, realized Babylon was going to be this massive catalyst for onboarding Bitcoin liquidity into DeFi. And
mhm,
so much progress had happened in the Bitcoin ecosystem since I had last looked at it. Now you
mhm,
had real builders, you had Bitcoin maxis starting to accept expressivity, you had
mhm,
the core devs thinking about how we could include different expressivity improvements at the base layer. So
mhm,
everything had changed. It kind of felt like we were past the point of no return. And
mhm,
when I was at Perennial, I think we were building, in the perp space, you're sort of building for this like subset of DeFi users, as
mhm,
where building this, Bitcoin liquidity infrastructure kind of builds for everyone. So it's a
mhm,
chance to kind of step back, look at the whole DeFi ecosystem a little bit more broadly, and
mhm.
work with all the cool projects that I'd seen building in the space over many years in DeFi, as opposed to kind of competing with all of them, which has been a lot of fun.
That makes sense. I mean, that's a really interesting point. How that you're saying that you're focusing more on the sort of broader and global audience rather than the very sub point of DeFi. Do you think that sort of changes your mentality as a builder? Is it easier
Yeah,
to attack something that's sort of like very broad and global versus something that's very specific?
definitely. Well, what the way I'd put it was when I was investing in Polychain, I think I almost trained my brain to think a little bit too complex. Like I was
Mm,
trying to think like what are the crazy things that haven't been done yet? How can we build the most complex mechanisms for a fully bootstrapped DeFi ecosystem or something? And it was, when we started Lombard, it actually took me a little bit to kind of bot back to the beginning, get back to the basics, the fundamentals. Like,
mm,
why does DeFi matter? Why is Bitcoin cool?
mm,
Why is Bitcoin liquidity important in DeFi? And
mm,
so, kind of going back to the basics, starting simple really has been a bit of a godsend, and really has been, you know, I think what everybody's needed from the ecosystem. Everybody wants Bitcoin liquidity. Every new protocol, every new chain
mm,
is begging for some form of liquidity. So it feels like we're solving like a real pertinent problem, as where
mm,
before, maybe you were sort of incrementally improving the DeFi ecosystem or solving like a couple people's problem, but maybe
mm,
not as pressing enough of an issue for people to really care about it. So, staking is like the simplest form of on-chain finance. We
mm,
sort of start there, pitch that to some of the biggest Bitcoin holders in the world, and then
mm,
eventually try to upsell them into all the benefits of, the Uniswaps, the Aves, the
mm,
Hyperliquids, you name it.
mm. Well, do you think it's been easier to fundraise now that you sort of like talking to a more global audience compared to something that was like a very niche perps protocol?
It's a good question. Both fundraised quite well. I think they were easy to get investors excited about.
Mm,
So I don't know that one was easier than the other.
mm,
I would say, but look, it's a whole hell of a lot easier to pitch Bitcoin liquid staking than it was to pitch, the 15th new DeFi perps protocol or something like that, right? So it certainly has been exciting to be able to go to people and be like, hey, I'm bringing Bitcoin liquidity protocols, and they're like, I get it. I don't
mm,
need to have a further conversation. So
mm.
it's been a lot more doing and a lot less of like talking and user education on some level.
Well, that's pretty interesting as well. I mean, you said that you made the example of the 15th, perpetual protocol. Well, do
Yeah,
you think we're at that stage in Bitcoin liquid staking protocols now? We're seeing a lot of Bitcoin liquid staking protocols pop out and fundraise. I think it was maybe 3 or 4 months. Like my entire
yeah,
Telegram was just this protocol raised, the protocol raised, all Bitcoin.
exactly.
Do you think it's kind of like that stage now of
Yeah,
this?
maybe so, maybe so. But I guess the way to frame it is, when I said 15th DeFi Perps protocol, I guess it's like, the first couple successful Perps protocols, they were
Mm,
like really, really solving a user need. There was no place to trade
mm,
leverage tokens, especially for the long tail or like at size. GMX popularized passive liquidity in a Perps protocol in a
mm,
way that didn't get LPs burned. This was huge. But then everybody else, I think, who went in and tried to compete with GMX struggled a little bit because GMX had already solved the problem for users.
mm,
Every incremental solution just didn't have quite as much impact. This is
mm,
kind of the same way where Lombard was one of the first out the gate. We solved a real user pain point, and now everyone who's coming in and competing has to come up with some incrementally better solution. And
mm,
unfortunately, I think with Lombard, it's going to be really tough to do that.
mm,
Lombard wasn't even the first out of the gate, though. I will say, there were Bitcoin LSTs live for 3, 4, 5, maybe 5 months was the longest before us.
mm.
But I think we came out the gate with a lot of firepower. We're working with all the best DeFi protocols. We were sort of the first Bitcoin LST to build a real DeFi ecosystem, and really have been a leader in that front since the beginning. So
Mm.
liquidity is king, and Lombard was first to kind of make this happen at scale.
Mm. Well, I mean, why don't you tell the users about like what exactly is Lombard? Because like, I mean, my
Yep.
my audience is sort of very Berachain focused. I mean, not many people are perhaps like that ingrained into the Bitcoin ecosystem as you are.
Yeah,
What's
definitely.
specific about what's uniquely possible, and maybe dive a little into the technicals about phase one, phase two of Babylon, and how that's sort of like staggering on.
Yeah, absolutely. And I wasn't that deep into the Bitcoin ecosystem either when I first started this. But the way to think about it is, people who are deep in DeFi, being deep in DeFi, I think is more important. Bitcoin is just another asset we're bringing to the ecosystem.
Mm,
We've always been able to do it. Lombard just makes this in ERC20. So the
mm,
way Lombard works is, Lombard's built this protocol that allows users to deposit Bitcoin
mm,
into Lombard. Lombard stakes it into Babylon, and then we mint a liquid representation of that staked Bitcoin on one of a number of chains. Right now, exclusively on ETH mainnet, and there's sort of some periphery contracts that allow us to mint on Base and BNB. But come the launch of new exciting chains like Berachain, you'll be able to mint that LBTC there. And this LBTC is representative of the staked Bitcoin and one underlying BTC that you can use within all your favorite DeFi protocols. So the
mm,
the hope is that LBTC becomes this sort of blue chip security first S asset, similar to like STETH, but for Bitcoin. That's kind of the North Star. And Lombard is, unlike ETH LRTs, for example, that
mm,
have this kind of shared security primitive in smart contracts that they can build upon. Bitcoin doesn't have this, so we kind of had to build expressivity on top of Bitcoin from scratch. So you can kind of think of Bitcoin or Lombard as some form of a Bitcoin L2 or bridge, in a sense that Lombard Consortium, this group of independent parties. We're launching this a product we're calling Lombard Ledger, which is basically it's a Cosmos SDK chain. It'll become a BFT. It'll have scale up to 21 validators. This
mm,
will provide the decentralized infrastructure that allows for Bitcoin to be deposited, staked into Babylon, and then ultimately minted on many, many different chains. So,
mm,
we had to build a lot to get here. I think Lombard's maybe one of the only Bitcoin LSTs that sort of isn't trying to take massive shortcuts, just utilizing centralized wrappers and centralized custodians. From the
mm,
beginning, if we were going to build this STETH Lido-esque primitive, we were going to have to think about the big problems here, like how can we secure Bitcoin in a decentralized manner.
mm,
And all of this is coming to fruition here over the course of the next couple months.
mm,
And I think I sort of mentioned this already, but Lombard has been heavily emphasizing Bitcoin, or rather DeFi usage from the start. So when we launched with Pendle, Morpho, Gearbox. EtherFi was a launch partner. We were the first LST added to Symbiotic. We've sort of been leading the way since the beginning in DeFi. I think we, at one point, were the third largest WBTC pool on ETH mainnet, and we were the second largest CBBTC pool on Base. We would be the largest, but Virtuals, was pumping, gathered up a lot of CBBTC liquidity. And there's no doubt in my mind that, LBTC will become the largest Bitcoin based asset on Berachain. And one thing that particularly excites me about getting LBTC involved in the Berachain ecosystem is, you know, Bitcoin liquidity will always be second tier. Maybe not always, but at least for the foreseeable future, will be second tier liquidity in the ETH ecosystem. And kind of the same in Solana, right? Like Sol and ETH will probably still be the base asset. In Berachain, things are looking a little bit differently because of this sort of Boyko liquidity bootstrapping program, and because of a lot of the emphasis that Smokey Jack and the Berachain team have put on Bitcoin liquidity. We could see an ecosystem that's built on Bitcoin from the beginning, or at least a Bitcoin and ETH DeFi ecosystem that are prioritized relatively similarly. So I'm excited to see what happens. And we launched this sort of pre-deposit vault. It's been live for maybe 48 hours at this point, or something like that, and has amassed something like $75 million in liquidity. So that's $75 million in base liquidity in DEXs and lending protocols for the Bitcoin ecosystem that's going to be built on top of this.
Mm, mm. I mean, why don't we talk a little bit about like sort of the Berachain vault itself, like its advantages versus like, I know we saw like previously at the start of the year, Blast did the pre-deposit campaigns. Circuit did their sort of pre-deposit, and it was just like deposit, earn yield, and then the dApps on top of Blast had to re-incentivize everything. How do you think this sort of changes it? Do you think it's a completely new dynamic?
Yeah, well, I don't think it's a completely new dynamic. At the end of the day, the incentive mechanism is relatively similar. Do some action, get some reward. Thankfully, I think everybody's crazy excited about Berachain, and they've built a real fundamental ecosystem around this that makes people think that all this is going to stick after the fact. So I think this has incited a different level of excitement relative to some of those past campaigns. Maybe the one big difference I see with the Berachain Boyko campaign is that, from the beginning, this has been focused on productive capital. So it's not just we're bridging assets over, it's you're doing some valuable action, in this case, depositing into either a DEX or a lending protocol or some other DeFi ecosystem participant in Berachain, which is basically providing a base layer of liquidity for everything to build upon. So, I mean, we talked about this yesterday or on the Christmas Day Twitter Spaces, but Berachain through Boyko solves this sort of cold start problem of DeFi ecosystem. You now have sort of probably like overly liquid DEXs and lending protocols, which then form the foundation for everything you might want to build on top. You can't even think about building a perps protocol with different types of collateral until you have really liquid DEXs and lending protocols to sort of support that sort of primitive built on top. And I know there's a lot of cool things that are building on within the Berachain ecosystem that will that'll benefit significantly from this, including Lombard. We don't have to start at the beginning here. We can start going to talk to all of the novel use cases, build all of the cool products that will drive LBTC yield in a really material way from the beginning. So it's cool to not be able to wait. What'll be interesting is it's almost like this Boyko problem is probably going to significantly oversupply liquidity to Berachain, and it'll be cool to see how much of that sort of sticks around. We basically have like the LBTC Lombard Concrete Vault has about a 3-month lock in it. There's sort of this, potential like a variable period. People will be able to choose longer lockups, shorter lockups. But during that sort of lockup period where all this liquidity is sort of committed to these DEXs and lending protocols, builders will be able to come in with some sort of assurance that all this liquidity will be there, and that gives us a couple months to like build all the cool shit that ultimately will stick around. The Jupiters, the GMXs, the Hyperliquids, stuff outside of the Aves, right? Stuff that's driving real DeFi yield within the ecosystem.
Well, do you think that security assumptions is a very, very big sort of topic here? I mean, like, sort of like you as Lombard had to convince people to, number one, take their native Bitcoin and convert it to LBTC and, take the security assumptions of Lombard plus Babylon. And now you're trying to convince them with these additional risks to take on additional Royco risks, then the chain risks, then the bridge risks, and then the chain risks, and then the native dApp risks. So there's like multiple different layers here. Do you think that's something that's going to factor into people sort of like depositing into these pre-deposit campaigns and sort of the attributed real risk reward ratio?
Absolutely, 100%. Almost every conversation we have with LP starts at security, and I think there's sort of two ways to view security. One is smart contracts are scary. I don't understand them. I don't want to touch that. That's sort of one
Mm.
way of viewing it. And then the other is like, I understand smart contracts enough to sort of have a risk profile of a type of risk that I'm comfortable around. So like, I think, and there's not all that much in between, there's not a lot of users who are like, I'm comfortable with, well, correction. There's some users who are like comfortable with just some DeFi protocols that won't be able to get comfortable around like net new stuff. But, at the end of the day, a lot of these risks are honestly hard to judge properly. And the best we can do is we can test in production. We can get audits, have a bug bounty, do all these things up front that kind of create the right foundation for all of this, and then
Mm.
this is sort of what gets users comfortable around it. So you're absolutely right. I mean, Lombard spent the first. I mean, we've been around for maybe 5-6 months at this point. We spent the first 2 or 3 just grinding to get to a point where people would feel that Lombard was like somewhat battle tested enough to begin toying around with it. Now
Mm.
Lombard, has
Mm.
been around for a few months. Now it's up to about $1.5 billion in Bitcoin secured within the protocol. We have built out all kinds of checks and balances. We're just about to significantly decentralize the Lombard consortium. We're sitting in a really good place, and so I think the question is how do we then convince users to take this extra step, take on some additional risks. And I think in line with the view of risk I was, discussing beforehand, where it's like, on one hand, I want to take no risk. On the other hand, I want to take, calculated risk, but I want to be rewarded for it, So like one funny thing I hear from institutional LPs is there are 3 protocols I'm comfortable with: Aave, Uniswap, the 2 most battle tested protocols in DeFi, and the third, Pendle, because Pendle at least, provides enough yield to maybe justify the risk you're taking on. I think a lot of smart
Mm.
contracts are EV negative after accounting for smart contract risk. And
Yep.
I think Boyko is going to be a very similar story where certainly there is some risk you're taking on in the form of
Yep.
helping bootstrap some of these liquidity primitives that are going to be net new within the ecosystem. But the
Mm.
benefit you're getting is potentially a significant reward. The one thing I note is the Lombard Concrete Vault is going to be very risk off by default. So we're deploying 2 protocols. Uniswap fork in Kodiak, that is one of the most battle tested code bases in all of DeFi, and
Mm.
Dolomite, which has been live on Arbitrum for a year plus now, with $100 million plus in TVL. So I think both of those form like a really good foundation, and I think anything new that would be added to the vault would have to undergo some pretty rigorous security, some rigorous security threshold to be able to meet the standards we're looking for.
What about the strategy providers? Like, for example, like the native Lombard, like 7Cs, and this one is concrete. Like, do you think there's a sort of discrepancy there that should be noted for?
I don't think so. I mean, certainly. So Lombard's been working with 2 different vault providers. One is the 7Cs team over at Veda. They were awesome when we were first launching Lombard. We were looking for a vault provider, basically with the idea in mind of like, users shouldn't be. We want a lot of Uniswap V3 liquidity or DEX liquidity, but I
Mm.
don't want users to have to go there and try to think about like, how am I going to rebalance my liquidity? And it was like this whole problem of, okay, how do we incentivize really deep liquidity? It was easier just to say, hey, here's an automated vault. This is kind of your one-stop shop. We have on the back end is basically like a professional market maker who's going to
Mm.
provide super, super efficient liquidity. In fact, Veda has been providing more efficient liquidity than some of the market makers we've been working with, which is kind of funny. And
Mm.
so this has been a total cheat code for us from the beginning. We, had the benefit of Veda being extremely battle tested from the beginning. They'd already been working with EtherFi. So when we were thinking about coming to the Berachain ecosystem, we got in touch with the Concrete folks who had already been, deep within Berachain, I think, from the beginning.
Yep.
And I think in a lot of ways, they're sort of taking this to the next level. They sort of very similar infrastructure in a sense that, you have a very sort of simple vault contract, 4626 vault, that allows you to deploy liquidity into and sort of do all kinds of things. So you can whitelist protocols. There's sort of strategies that are run off chain, built by some of the best. Like, I've talked with Nick and the Concrete team about some of the DeFi strategies they're running off chain. These guys are doing some of the coolest stuff, and
Mm.
now they're democratizing this for all users to be able to access. So
Mm.
it is really a privilege to have guys like the Concrete team on the back end,
Mm.
essentially writing the strategies that will ultimately deploy your liquidity. So
Mm.
I don't think there's necessarily like Concrete is a little bit is a little bit newer, but again, taking all the sort of standard security precautions. And this is one of those things that we'll ease into a bit. Start with very battle tested protocols, very simple strategies, and incrementally improve those over time. So yeah, certainly some risks to take note of, but I think couldn't be working with a better team on that front.
No, 100%. I agree. These guys are super ingrained in the Berachain ecosystem.
Yeah.
That brings me on to my next question, though. Sort of like the Lombard Berachain Vault it has all these like sort of like points providers. It has number one Concrete. Lombard is providing points. Kodiak is
Yep.
providing. Goldmine is providing points. A lot of users want to know like what's stopping their points from being infinitely diluted, right? This is like an off-chain concept. What's stopping the protocol from just issuing more and more points, right? Like, what do you think about this concept here as a sort of like vault?
Yeah, it's a fair point. One of the beauties of the Boyko program, and I'm not sure what all is public just yet, but I think you're going to see a lot less generic, broad points mechanisms and more like hard token supply numbers come out within this program. So certainly some of these have been communicated to us, which make us really excited, because then I think it makes it really easy for LPs to make this calculation of, if I do X, I receive Y. Of course, subject to certain assumptions around how much money goes through the liquidity program or it gets deployed through to different protocols. So I actually think this will end up being much better, more transparent, I think, than past mechanisms.
So that realistically, most people will just be like, okay, if token FTP is this, and these sort of projects are emitting this much of the token supply, this is how much APY I can earn. That's basically actually going to be it, right?
Exactly. Yeah. This Boyko program ends up being like such a cool place to lock liquidity for a couple months, because you're sort of, commingling a lot of beta into one like super high beta opportunity, in a sense that, like, if you believe Berachain is going to be a really strong ecosystem, then you want exposure to Bera. On top of that, you're getting exposure to Kodiak, which is may become like the core DEX within the ecosystem, and Dolomite, which may become like the lending protocol within the ecosystem. So you get broad ecosystem beta plus the two highest beta opportunities. I mean, VCs for years have been sitting here playing this game of, whenever a new ecosystem pops up, I invest in the best DEX and the best lending protocol. You get all three wrapped into one in the form of this, like, these pre-deposit vaults that are deploying to Boyko. So really cool opportunity.
Yeah, no, I think that's a really, really good explanation. Final question then: what do you think is the sort of like the end state of Lombard? Like, where does everything end up? Like, final goal?
Yeah, I think the end state for LBTC is to become that STE of Bitcoin. If we can make LBTC this hardened primitive that is decentralized, can sort of last entirely with the Lombard team stepping away, something to the point that is has basically like a DAO and an ops structure that has so many checks and balances that there's no way any single party or any collusion of reasonable collusion of parties could steal your Bitcoin or lead to some sort of detrimental activity within the protocol. Then I think we'd be able to say good. Smart contracts are a better primitive for being able to do this. In the absence of those, we have to do what we can in the short term. And within the next 2 or 3 years, I would expect that either BitVM research matures and Bitcoin can have true non-custodial trustless Bitcoin L2, similar to like an optimistic or ZK rollup, and or maybe Opcat gets matured. So there are Bitcoin expressivity solutions coming soon. We're sort of building the stopgap solution for the next 2, 3, 4 years to be able to secure 10, 15, 20, I don't know, $100 billion of Bitcoin. So that I think is the end goal. For Lombard, I think we just want to be at the center of everything happening in Bitcoin DeFi, and ultimately of all sort of capital coming on board. Earlier I was talking about how it's been sort of refreshing to go back to the basics, and I think that's kind of the focus for Lombard all along. We're going to start with very simple methods of onboarding users to on-chain finance. Our goal is just to get people's crypto out of cold wallets into simple forms of on-chain finance, and then we can start discussing all of the all of the higher level primitives, the permissionless market creation, all the cool stuff that we've built within the ecosystem. So it's sort of starting simple with things that are battle tested, sort of obvious financial primitives for the biggest institutions in the world to be able to grasp. And once they grasp that, then we start talking about all of the different more complex mechanisms that more crypto native funds and Protail users have have adopted. And ultimately, the more liquidity we can get on chain, the better. DeFi wins when passive liquidity starts to becomes more significant than the sort of active liquidity on some centralized, isolated order book.
Mhm.
And I think we've started to see that in certain areas, but I think the more liquidity we can bring on chain, the better. It's only a matter of time before DeFi becomes more liquid than CeFi.
Mm. Well, to wind it back a bit, like to address your point about decentralization and sort of
Yeah,
ETH, do you think that the Lido DAO has achieved that certain amount of decentralization that you'd like to see with Lombard in the end state?
yeah, definitely. They've done a hell of a job with decentralization. Yeah, I think it's definitely a model for us to look to. You know, non-upgradable contracts, a DAO that's sufficiently decentralized. There's a lot of great things I think that have happened in protocols like Lido, Aave, Uniswap. These guys have kind of figured out what the model for decentralization looks like, and I think
Mm-hmm.
we're trying to emulate that in a little bit of a harsher environment.
Mm-hmm.
And again, hopefully, Bitcoin, research will pick up and be able to support us a little bit better on the technical front. In the meantime, we kind of know where we need to go. And one thing that's funny is uh, because there are no smart contracts in Bitcoin, you sort of expose the full spectrum of risks. So people are building everything from like centralized wrappers and exclusively centralized custodians to Lombard trying to build a fully decentralized mechanism.
Mm-hmm.
And what I have found through this again, going back to the basics, is that decentralization matters practically on a long-term basis, or rather on a short-term basis, just because of operational security. Like people who are building very centralized mechanisms, I think the users sometimes forget on the back end like what that means. It means that there's like some people holding keys that you are praying are secure, and or there's like a couple team members who are clicking buttons
Yep.
on a web interface that they're also using to trade meme coins, and you're
Yep.
just hoping that they don't enter in the wrong number,
Yep.
or somebody else isn't behind their laptop. Like it is really scary to have one team controlling $1 billion in TVL, and
Yep.
really it shouldn't be acceptable. No other, I mean, even like a bank or some sort of centralized platform that's securing a lot of assets, they have a ton of checks and balances. They basically built this whole system of off-chain smart contracts, and you
Mm-hmm.
have people who aren't security experts trying to build that same infra. We don't need to do this. Like, let's just build things to be operationally robust to last forever. Otherwise, it's funny, in Bitcoin everyone's trying to build like WBTC competitors or better forms of WBTC, and
Yeah.
everybody's out there building worse forms of
Yeah.
WBTC, really, with worse forms of trust assumptions. So we're trying to do this, and honestly, LPs demand it. LPs in Bitcoin DeFi, Bitcoin is this like really precious asset. They don't want to trust some team or some, trust me, bro, doesn't work in this ecosystem. You
Yeah.
have to build like ultimately, I think like non-custodial mechanisms are going to be arguably more important in Bitcoin DeFi than in ETH or Solana DeFi.
Mm, Yeah, no, I relate to that point about like WBTC wrappers a bit too much. Sort of like
Yeah,
people trying to build a WBTC condom on top of a WBTC and then LST on
yeah,
top of LRT on top of that, and then chuck it into like Karak or on EtherFi or something like that. And there's like 10 different layers of
exactly.
something.
Exactly. And like WBTC didn't have bad trust assumptions. Like there were some trust assumptions you had made, but you had one of the biggest, longest standing actors in the space kind of spearheading this. And then they had a WBTC DAO, and they had a consortium of some of the biggest groups in the industry who were all sort of collaborating to make this happen. All things considered, I mean, it was pretty damn good. And same with CBBTC. There
Yeah.
are pros and cons to building primitives in different ways, but
Mm,
the worst form of that is a team without a lot of existing brand, having exclusive control over your Bitcoin
mm,
in ways that probably exceeds what users would be comfortable with. But the tough part is a lot of times users just don't know.
mm,
The transparency in Bitcoin DeFi has been that great. But all things considered on the security front, Lombard's trying to lead the way. This has
mm.
kind of been our goal from the beginning, and I think we've done a pretty good job of that so far. And with the launch of Lombard Ledger, I think we'll sort of define a new standard.
Well, you guys heard it. I can't even speak. You guys heard it here first.
Yep.
Lombard will lead the way. Jacob, thank you so much for coming onto the show today. Really, really appreciate it. I think that everyone, including me, learned a lot about sort of the Bitcoin ecosystem, and we'll see a lot of Berachain people getting Bitcoin pilled as well.
Absolutely. Well, thanks a ton for having me, and appreciate all the love on the pre-deposit vaults you've been giving on Twitter.
Yeah, for sure. Well, Jacob, thank you.
Cool. Thanks.